Hi everyone, it's Max from IOF Trading. Welcome back to another IOF Smart Tips video. This time we are covering trade management. Getting into a trade is only really getting your foot through the door. Half the battle with forex trading is managing the trade when you have an open position. I've been trading for just over 2 years now, and throughout this whole process I believe trade management is probably one of the hardest skills to master. It definitely wasn't easy to do so, and I often found myself get frustrated with the process I was making. In the Smart Tips series, we cover the topic of trade journaling. Trade management will not be improved unless you begin to document your trades, so make sure you do these two in sync. Now, let's move on to some ways we manage our trades. Okay guys, so this was actually a trade I took on USD CAD not so long ago. As you can see, the reasons for me taking this trade, we've got a band of resistance here. So we've got one touch, a two touch, a third touch, and close to a fourth touch actually. As you can see, prices start to slow down as it approaches this retest of this ascending trend line. I've set my first target as this blue line here. We've actually got an area of support of, one touch here, one touch here, one touch here. So there's a clear area of price support and resistance, as you can see from this candle all the way down here. I really like the look of this 1 hour rejection, half retrace on the green candle just here. So I'd place my stop loss 2 pips below this candle, and my entry 2 pips below that candle, and my stop loss just above the high here, a 42 pip stop loss. So there's many ways of managing this trade. The first way I'm going to be explaining is moving to break even at 1%. So let's let this play out. This is actually on the 4 hour. As you can see, 240 minutes is 4 hours. So let's play it candle by candle and see how it plays out. As you can see, we've got a spike here, confirming this as a area of resistance. So now it has become a fourth touch, one touch, two touch, three touch, and then that's the fourth touch there. It didn't look too healthy here, where we had this massive rejection to the upside. But we'll let it play out anyway. We're always limiting ourselves to 1% risk. Okay, so here we had a really nice 4 hour rejection, as you can see. The trade at this point is running 0.6%, 0.6% in profit. Let's keep moving it forward. As you can see, it slightly came back up, but let's not worry about that. We'll keep forwarding the trade on. Still in profit here. And then there, another really nice 4 hour close. At which point here, this trade is now running 1.5%. So what I like to do, as soon as the trade is running 1%, so at this point here, I would have moved this trade to break even. Now that's our first point of trade management. As soon as the trade gets to 1%, move it to break even. Or if you're not happy with the way price is moving, which some people might have done with this sort of phase here. I mean, there was about half a day in this period here, so some people may have just closed this trade as they didn't like price movement, but I would have moved it to break even when the trade had got to 1%. Now the second way of doing this, of trade managing, is when a trade gets to roughly 2%. So let's keep moving this on. Now here, this trade actually got to about 1.885%, around that area. At this point, I probably would have moved and started to lock in some profit. So at this point here, I would have locked in 0.5%. So we're guaranteed if this trade reverses up here, we're in profit, we're in the money. Yes, it's not a great profit, it's only 0.5%, but I've said it before, a water droplet will fill a bucket as long as it keeps dropping. So 0.5%, we'll take that, we'll move on to the next trade and keep going. The third way of managing this trade, like I say, this trade was actually running 1.85% at one point. We could use what's called a trailing stop loss. A trailing stop loss is basically as your trade moves in your favor, it will trail your stop loss with it. So say for example, this trade was running about 1%. It's gradually going to move your stop loss down with the trade. The further it goes down, the further your stop loss is going to move it, and the further you're going to lock in profit. Now this is all good if you're going to do those intraday trades, those little short snapper trades. But if you're holding more sort of long positions, I'd probably prefer to use the first two methods that I mentioned. That's purely because you have more control over the trade rather than a trailing stop loss, where you could have one big wick. Let's draw it on say for example we had a big spike up here, just take you out, and then that long trade where our target is down here might not happen. So yeah, just going back to holding long-term trades, remember first two methods. If you're going to do more sort of intraday trades, you can trail your stop loss. It just depends on the market conditions as well. Now the fourth way of managing a trade is manually closing the trade when it gets to a certain obstacle. Now some people would have drawn a trend line. We'll just grab this one for now. You could draw a trend line here like this. Highlighting the fact that there's going to be an area of resistance around here. Sorry, support. I mean, it didn't happen in this case, but some people's first target would have been here, which is very reasonable. It's a 1% trade. I mean, we don't suggest to take a 1% trade, but some people do. So some people would have had to take profit at 1%. As soon as their trade got to here, they would have closed it. They're happy with their 1%. Now, why did they close that trade? Because they may have seen this as a bigger correction to go higher. So they're happy with the 1%. They're going to lock that. They're going to run with their 1%. And there's nothing wrong with that. But you just have to be wary of the different ways of trading. Sometimes you will trade this way. Like I say, it depends on the conditions. Sometimes we would hold this position all the way down here to try and gain 2.9 or 3% in this scenario. So let's just see how this trade played out. Like I say, it actually got to 2%. And then we saw this big spike here. Now that's interesting because our first two methods would have taken us out at 0.5%. If you close this trade manually, when it got to this area of support here, you would have been running 1%. So in this case, that would have been the best scenario, or quite possibly a trading stop loss. Depends on how tight you have your trading stop loss. You could have been taken out for roughly sort of 1.5% on this, depending on how much room you left the trade to breathe. But yeah, so there are your four ways of trade managing. If you had any questions about this, please don't hesitate to drop me a message on Slack. I'll get back to you as soon as I can. But yeah, I look forward to speaking to you in the next video.